A new reality is about to be entered by silver. The price is right, I'm in love with it. This proves that those complete dimwits are not gone. Sure, they got, quote, an overbought position in the short term when they threw a coin in front of a freight train, but they failed to consider the bigger picture. Plus, I wouldn't be surprised if, after we hit 50, we end up in a situation where we close one and start talking about December futures. They are currently 47 years old. Today, they reached barely below 50. No, I'm not making any predictions. I'm simply stating that this would be fair when they reach 50. You go there, close one day at 49, and the following morning you open $3 higher. Maybe it's a limit up or something. You never know. Out of nowhere, one of the basics kicks in, and you ensure that these people don't have an opportunity to escape their short position. When you're 50, those shoes are like a wall hanging. It appears that they have a way out. Furthermore, the fact that it occurs in that manner would not surprise me in the least. Therefore, it delights me to observe the selling at 50 since it indicates that the moron is still present. Sure, the front month contract is what we keep an eye on in futures. Spot is higher than the front month contract, I know that now. Additionally, it briefly dipped below 50 before rising to 51. Thus, it achieved unprecedented heights. Neither did futures. A few cents short of $50, they halted at 49.76. So, one individual decided to sell the nearby future at a price little below 50 and take a nickel of risk. Sure, drop a dime. Quite the bargain, I must say. Very well. Excuse me, but I believe it's ignorant marketing. We are of the opinion that silver is on the verge of a transition, a new reality, based on our technical evaluation. It's not keeping up with the rising trend. Its pricing range, which it has occupied for half a century, is undergoing a complete transformation. There have been 50 high points and 20 low points, and it has remained in that range indefinitely. To view lead or zinc. Pricing histories, for example, you can visit Fred, the website of the Federal Reserve of St. Louis. In any case, they only have charts available up to the 1990s, so there's no monthly close. And you'll notice that those two base metals were in a zone for almost 15 years. Additionally, silver and gold were already in a strong upswing towards the end of 2006. These base metals saw a meteoric rise in value, tripling in just a few years. Indeed, they have descended again since then, but they have never again descended into that earlier realm of reality. Their new reality zone is 10 to 15 times larger than the one they were living in from the 1990s to 2000 on average. All right, this is where it was in the 1970s, sober, in that first range. 990, the peak from 2011. Prices of gold have risen over their all-time high from 2011. Copper prices are higher than their all-time high from 2011. And this still contains silver? I need a break. I understand. We are well versed in the basics. Since keeping up with them isn't our thing, I don't make an effort to do so. However, according to the technical analysis, we are ready to break out of this range, which would mean more than just a temporary boost. It would mean entering a price zone where nothing has ever happened before. I would be surprised if it's less than 100. The range could be 100, 200. Plus, I anticipate that a good chunk of that will happen in the next 5 or 6 months. One trigger is all we need now. Gold and silver are spread out in that relationship. On top of that, we also do momentum research on it. Now everyone is looking at the ratio, which is something like 80-70-1. We approach it in a unique manner. In order to express it as a percentage, we divide silver by gold. As of this writing, the price of silver is 1.2% of that of gold per ounce. With a 50-year perspective, that's incredibly low. Over 2% has occurred in 21 of the last 50 years. The price of silver is now equal to 2% of that of gold. Some of those years even did not have a bull market. We may be underwater, but the spread charts show a definite hierarchy. The spread chart shows that a triple top breakthrough is imminent around 1.31% relative to gold. Accordingly, we are not far below that. Its spread versus gold in 1979 experienced the same effect when we crossed that level. And in late October 2010, right before silver's price went absolutely boom, from $20 or so to $50, In the span of a few months, the spread was the telltale sign. While we wait for it to burst through, we're keeping an eye on that. Even lower than that 1.31%, which is a previous double top, our spread momentum indicated. That won't happen unless we break out. I intend to fasten my seatbelt the moment we do, as soon as the outbreak occurs. For the next 2 quarters, I believe silver will be the go-to metal. With this shift, huge changes may occur. After some time has passed, you see the reasoning behind it. The demand for supply has been low, and so forth. When contrasted with other metals, such as copper, which have seen similar price fluctuations before readjusting to reality, the market has remained irrational for an excessive amount of time. Well, I think it covers most of my points. That fact has been known for some time, yeah. Yes, we are aware of that. In recent years, when supply and demand have remained stable or even increased respectively, etc. But the price hasn't moved at all. I assume you also consider monetary terms. $50 in 1980s money terminology. Right now, where would it lead us? I think it's 250, all right? And the depreciation and worth of the US dollar, both in terms of its purchasing power and its value relative to other currencies. The money supply has grown by over 150% since 2011. I see. So, since its 2011 peak, has silver risen by that much? No. Sure, we're aware of a wide variety of realities. This is absurd, we think as we scoff. I guess we do. We are aware that it has the potential to shift in a manner that is, well, we have witnessed it in other marketplaces. After enough time in the industry, we've seen firsthand how absurd a market can become when its value is excessively high. Everyone now refers to it as a bubble looking back. We didn't refer to it as a bubble, of course, while it was happening. Sometimes a market is kept under wraps for a long enough period that people start to believe that it's a new reality. It is completely useless. Silver is no longer important to anyone. And then it says, I'm going to wake up out of nowhere. The market is fallible. When it comes to allocation and realistic pricing, investors often make mistakes. Such occurrences do occur. Not all market behavior is logical. Furthermore, I contend that silver's decision to remain below this base range high for the past 10 to 20 years, in contrast to practically every other metal in the world, was unreasonable. Not even silver? Oh, I see. For what purpose? Because of its status as a money metal, silver is currently following gold's price movement. However, once silver begins to focus on fundamentals, as seen in the graph we just saw, it will begin to thrive independently. Additionally, I believe it will transition to a different reality. Also, $200 is totally reasonable when converted to dollars. Additionally, markets have a tendency to overcorrect when they experience irrationality in one direction. I understand. You surpass all expectations regarding the new silver reality. Perhaps the next 10 to 20 years will see silver hovering around the $100, $200 range. In any case, it might hit 200 before tumbling back down to 150. If I told you, you'd understand. A new reality has emerged. That is what the technical analysis is suggesting, particularly the spread relationship to gold and the long-term momentum analysis. Just to go back to reality, you could argue that silver is worth 2% of what an ounce of gold is worth. This is 21 times in the previous 50 years you've witnessed it on that scale. Silver spreads and gold rises above 3% in bull markets. The price of gold reached 6.5% in 1980, but suppose it just drops to 2%. Just how much is 2% of $4,000 in gold? So what if gold does what it did twice before? And we've been debating this. There were 2 bull markets in the previous half-century, but the conditions were far less dramatic and seismic than the one we're seeing now. Each market went through 8-fold games, from a low point to a high point. We would be at 8,500 if gold went to do it again at another 8-fold surge. I mean, 2% of that is almost nothing. I think you understand now. Indeed, the topic at hand is the depreciation of currency. True wealth is a form of jewelry. Money is only paper. You know, Ludwig von Mises claimed that the government is the only global actor capable of rendering a valuable commodity like paper useless. In the weekend report, we included a chart, not our technical stuff, but the M2 chart, that showed money growth. Returning to the year 2000, well, I guess I should say 2020, we can see that the money supply has increased by 4.5 times from its level 25 years ago. The credit rating agency S&P has matched it. Put simply, it hasn't done much better than maintaining its purchasing power relative to the dollar. The increase in the money supply has been mirrored by the price of cattle. Therefore, since the year 2000, holding the S&P is worth as much as a pound of frozen beef. Ooh, gold! A 16-fold increase from the year 2000. I understand. So, what is your reality like as an investor? I understand. 16 times payout provider, 45% SRB, 45% gold 16-fold. That is the matter at hand.